So, can we see interest rates reach around 5.4% or higher? Well, I would say ask Kashkari. Kashkari came today, Fed Kashkari, and talked about his views on monetary policy. Now, before we get in and talk about what Fed Kashkari said, my name is Daniel, and you're watching Infovest, where we talk about all macro news, fundamental news on the markets. And if you're interested in news such as the stock market or on the economy or US markets or global markets, please feel free to subscribe, hit the like button, and comment below if you'd like to see any other videos or topics as well. Now, let's get into it. Kashkari came out today, told us a couple of stuffs, said a couple of comments. He came out, he said the following. I'm going to read it to you here. Basically said, appropriate to continue interest rate hikes at least at the next few meetings until confident inflation has peaked. Now, we have seen that inflation has hit 9.1%. It has come down in the previous months to around 7.1%. And he is suggesting that we continue the rate hikes in the next coming meetings. But of course, we're not doing it. He doesn't mention about those massive rate hikes that we saw with the 50 basis points or the 75 basis point rate hikes. We're now moving towards slowing the pace, but still increasing that bar of higher rates, but slower chunks. So that slower chunks is going back to the norm of 25 basis point rate hikes, which is what the market is expecting and anticipating. In the next two meetings, we're going to see a 25 basis point rate hikes, at least for two meetings. However, Kashkari did come out and say something that was a little bit tilted to the hawkish side. What did he say? Well, he said that he will need to see increasing evidence that inflation has peaked. He's not calling a win on inflation yet, which we know. But most importantly, what came out to be very hawkish was he said the Fed should then hold target interest rate, and says his forecast is that it would be at 5.4%. Now, this is big because last month we talked about, and what we saw in the economic projections from the FOMC is that the FOMC was projecting 5.1% in terms of interest rates. Now, after a couple weeks, 2 weeks or so, you have Fed Kashkari coming out and saying, yeah, we voted and the consensus is 5.1%, but I wouldn't mind seeing, and my consensus is really to see rates hit around 5.4%. And the fact that he's saying that they have not won the inflation battle, and that they keep coming out and saying that rates need to be higher for longer, they need to continue to raise rates, and even if they decide to pause, they need to hold at that level to bring inflation down. Now, I think this is going to be very important, very key in the coming months, especially when we're watching inflation data, especially when we monitor more and more data that's coming out month after month, is to really figure out if this language of higher rates are going to be heard from all or many or majority of the Fed members. We want to hear if majority of the Fed members are pushing for 5.4 or maybe higher. And we will only know after we see the data month over month. We will see the inflation data this month, next month, and so on. And we'll get to see all the other data, the macro data as well. Now, today, we did have some macro data that came out today. If I pull it out, we had ISM manufacturing. Now, very interesting here. ISM manufacturing came out at, ISM manufacturing PMI came out at the actual number 48.4 versus the expected of 48.5. So slightly lower right? And definitely lower than the previous months, but teeny bit lower than the expected number. So about a point 1 difference. And now the biggest thing is the manufacturing prices has dropped quite a bit. The expectation was 42.6. The actual number came in at 39.4, so lower. So that's saying, okay, and prices are coming down, and especially on the manufacturing side. However, what was a little bit surprising is the employment component. The ISM manufacturing employment came in higher, above 50, came in at 51.4 versus the expectation of 48.3. And this is what caused the stock market initially on this number to sell off. And then it later picked up and went back to P1 because of the weak prices and manufacturing PMI number, and the employment number was basically shrugged off. But the employment number was a big surprise because we did hear from the Fed saying that the labor market is tight. The labor market is tight, and that the Fed wants to see that job losses and the unemployment rate slightly rise. And if that happens, then that can bring prices lower, and they will be able to achieve their 2% inflation target. Now, if employment and jobs continue to be strong and continue to be stronger and stronger, then that means that the Fed can continue with its hawkish tone, can continue with its rate hikes, can continue with being hawkish or pausing for a very long time to try to bring inflation down. And if it doesn't, and if jobs continue and employment continue to be stronger, and the growth data is not as bad as expected, right? The key is not as bad as expected, then yes, they can continue with the hawkish tone, which then makes you think that when Kashkari came out and said about 5.4%, that if data continues to show some strength or resilience, then we could hear more Fed members talk about 5.4% or maybe even higher. I wouldn't be surprised if, only if, the data does come out stronger than expected and comes out and shows some resilience, then I wouldn't be surprised if we get to maybe even 6% in interest rates. That would be pretty crazy. And, well, would it be crazy? Because we did hear Bullard last month in December talk about the Taylor rule, saying that rates need to go above the inflation rate. And if you bring interest rates above the inflation rate, you can finally bring the inflation down. So, when I hear certain Fed members like Kashkari come out and say 5.4%, I mean, every couple of months or so, we hear a new Fed member talk about higher and higher and higher and higher rates, and this bar keeps going up. And if the market is not pricing that in, it can definitely create a lot of shock for the stock market and for equities. Because equities and bonds are pricing in that, or expecting that some sort of pause is going to come, and the equity market is hopeful that probably a pivot or a cut is going to come very soon. But the bond market at least is expecting a pause. And if that's not the case, that we don't get a pause and we actually get higher rates, and we continue because of the data, because of the resilience in the data or the labor market, then definitely you will see panic selling in the equity markets. So definitely keep an eye on more Fed communication, more Fed members. It'll be interesting to see, if we hear more Fed members talk about 5.4% or even higher. And it'll be very interesting to see where rates go. Remember, Powell did say that yes, we stopped the pace of the jumbo rate hikes, but we did not stop, or he's not stopping on raising rates just yet. And he said what people need to care about more is where this bar is, where this level is, where is it that they stop with rate hikes. So just because they're not doing 50 or 75 basis point rate hike doesn't mean they're done with raising rates, doesn't mean that they can't go to 6%, doesn't mean that they can't go to 6.5 or 7% or even higher. So we'll have to monitor and see what happens. Anyways, leave a comment below. Let me know what you guys think. Subscribe, hit the like button as well, and the bell icon to be notified on the next video. And I'll see you guys around. Cheers. Bye.